Joining us right now are ARK Chief Investment Officer, Chief Executive Officer, Cathie Wood is here. And Cathie, good to see you. Thanks so much for joining us. What's your take, whether you look at equities or the bond market? What kind of sentiment are you seeing this morning for equities in particular?
For equities?
Let's talk about $5 trillion in market value gain since the election.
Yeah, we are still recovering from a crash. We entered into new high territory last year. And we think at ARK, that we're in essence, a deflationary boom. We're seeing a lot of technology out there that is causing falling prices. That's good deflation. And I think the market is onto this. That's why the yield curve is doing what it's doing.
Cathie, do you think with what they call the FANG or plus Microsoft, are they now so dominant in high tech that they're going to overshadow everyone else? Can all these newbies come along and become the biggies of tomorrow, as we've seen in the past?
Yeah, well, we're seeing the data aggregators like Facebook, Amazon, Google. We're seeing them gain share because they've entered what we consider the sweet spot of the S-curve. So mobile advertising has just moved past 20% of total advertising globally. Whenever a trend hits 10 to 20%, we move into the sweet spot of the S-curve. So we actually think they're going to see surprisingly strong growth relative to expectations going forward.
Politically, is there going to be a backlash? You're starting to see a little bit of it in Europe.
You're like reading my mind. Yeah. That's exactly what I was thinking.
In this country or in any country, whenever you get big, the politicians come after you, one way or the other.
Sure. So the data aggregators, what we're talking about, they are big and they are going to get bigger. I think the Equifax hack has really highlighted this idea of who owns the data. Andy Kessler wrote in the Wall Street Journal this morning about this prospect of the government getting involved. You know, our capitalistic system will take care of this. Now that consumers and businesses, especially consumers, are alerted to this idea that, wait a minute, they're using my data, that's my data, we might see some changes afoot.
With the advertisers or with, like, Equifax, for example, you do not have a choice as an individual to keep Equifax from keeping your data. And I find that in this day and age, it's like if you go on the internet, you have some control over at least of how much of your personal information that you hand over to Facebook or you hand over to Instagram. A little bit less so than maybe on Google. But with Equifax, you can't say no.
I think they're going to change that. If I'm not mistaken, they have intimated or maybe even announced that in January they are going to allow consumers to have more control. So again,
but you can't say do not keep my data. Equifax has made that clear that you can't make that choice.
Right, you cannot make that choice. You cannot make it. Again, it's going to be shows like this and you know, newspaper editorials that are going to determine a lot of this, I think.
It's obviously the bond market's closed today for the Columbus Day holiday. But in terms of yields right here, you said this is why the yield curve is doing what it's doing. What are your expectations toward year end as the Fed is expected to raise rates in December?
Yeah, we think the yield curve will continue to flatten. And the reason for this, if you go back to the last period where we had this much innovation, late 1800s, we had an inverted yield curve all the time. And it was because unit growth was strong, inflation was surprisingly low, because technologically enabled deflation, back then electricity, telephone, an internal combustion engine, was driving inflation down. So this environment makes a lot of sense to us. We know it's puzzling to others, but we spend all of our time focused on disruptive innovation and 5 platforms, innovation platforms that are evolving right now, driving prices down, pushing into every sector. This doesn't surprise us at all.
You know, it's interesting. The banks seem to lie right at the crux of the reflation enthusiasm. I don't know what you think about the banks right here with all the majors reporting Thursday and Friday. Will it be a muted quarter? What's your sense?
I think they're going to do okay, but I think we're starting to get into an environment where they're going to have to start making money on a thing called loans, which is a very difficult thing. Loan lending, as Cathie has pointed out, has been very, very poor in this recovery, which is why the business creation, small and new businesses, haven't had the kind of vibrancy that you normally have in a recovery.
Point. You say that it's begun to turn.
Yeah, loan growth has just turned. It seems like the economy the growth is accelerating here.
Well, that will certainly set the tone for the rest of the week when the banks report. Cathie, good to see you.
Good to see you.
Thank you so much for joining us. Cathie Wood there.